Hi, Purva. Can we get started or could we give Babita a couple of minutes?
We can get started.
Okay. Is she joining?
She is joining in the next 2 minutes.
Okay.
Yep.
All right. So I'll just get started. Thank you, everyone, for all the participants who are here, and welcome to this webinar. As you can imagine, this webinar, which is the Mule Accounts and Identity Risk in India, moving from detection to prevention. Again, as all of us in this ecosystem know, Mule accounts and the challenge around that has been a huge challenge in India, and I think it's something that people are talking about a lot. Because it's a problem that needs to be solved, and I'll talk about a little bit about the scale of the problem, right? We're talking about 2.6, almost 2.5 million mule accounts being identified by I4C so far. We're talking about 20,000 crores worth of, for cyber fraud and illegal movement of money. With Operation Chakra, where the CBI dismantled a massive 8.5 lakh accounts across 700 plus bank branches. And we've all heard, and we know, I think all of us know someone who's been part of the digital arrest challenge, right? Because the sophisticated scams that are happening around digital arrest, I think affects everybody. And in somewhere in your sphere, someone has been affected by it. The good thing is also through some active defense, about 8,000 crores worth of money being siphoned off has been blocked through the 1930 helpline and the Pratim tracking platform. So the scale is big. I think everyone's looking to solve this problem. So it gives me great pleasure to actually invite a couple of panelists here to talk about this problem today and how we may look at, one, identifying possibly, and then also look at how we may be able to prevent some of these challenges that we see in the ecosystem. So with that, let me introduce Gaurav Gupta, an esteemed panelist that we have. He's Executive Vice President, Head of Financial Crime Intelligence at Axis Bank. With 25 years of experience across banking and financial services, Gaurav leads Axis Bank's Bank Fraud Prevention Charter. His mandate spans transaction monitoring, cyber-enabled fraud prevention, mule account detection, employee branch fraud, onboarding fraud accounts, assets and liabilities, and generally the fraud risk policy, right? So this is all focused around technology, automation, and a lot of AI-led interventions to build a fraud-proof bank. So thank you so much, Gaurav, for being part of the panel. We're having a little bit of technical difficulty, but our other panelist, Babita Shah, will join us shortly. She's Senior Vice President, Information Technology at HDFC Bank. And our third panelist here, and I'll talk about Babita when she joins, but our third panelist here is Prakarsh Paritosh. He's a Principal Product Manager at IDfy, who's managing our growth and all the new initiatives that we have at IDfy. So welcome, panelists. Thank you for your time today. What I'll get started with is, there's this sort of, we look at it, as a three-phase problem, right? There's a customer coming in, we onboard them. Then we do sort of a post-account creation. There is some activity that happens, and then there are transactions that a customer does. So I'll start with the first phase, which is your onboarding, right? Now, Gaurav, to you, is onboarding right now emerging as one of the most critical control points for mule prevention? Is that where we have a lot of focus today?
First of all, thanks, Paritosh, and very good afternoon to all the participants. Pleasure to be here with all of you. So Paritosh, as you rightly pointed out, this is a multifaceted problem, and origination is an important leg out there. And if I have to kind of put it very simply to you, see, historically, as a industry, we've not, there's a fair amount of checks that takes place when we onboard any asset side customers. But when it comes to liability onboarding, the perspective has largely been that, okay, fine, we're doing a KYC, we're taking certain documents, and that's about it. I think that's the paradigm which is changing, where we're saying that at the point of onboarding, just the way we underwrite a customer for asset, do we also need to underwrite a customer for onboarding as a liability customer? And there are multiple parts there. First is, of course, a proper profiling of the customer, which goes beyond the document. Second is that, deployment of certain models or rule engines, whatever you may want to call it, which would be able to flag any anomalous patterns or any obvious anomalies in the profile of the customer who's getting onboarded, either at an individual account level or at a cohort level. And finally, given that onboarding nowadays, even in a physical world, is largely a phygital process, wherein there is a fair amount of digital play, even to a so-called physical onboarding. There have to be checks and balances in place at the point of onboarding at the system level to be able to detect whether what is getting onboarded is correct or not. So I think we see action around all of these three areas, and this will continue to be an important defense in the overall anti-mule strategy. Given that if you're able to prevent entry of mules into the system, that's kind of the best situation to be in, because
Right.
everything else is in a way a postmortem.
Right. Yeah, and I think that's a fair point you bring. I think, and I'm very curious because you mentioned some AI models and stuff. So, at the onboarding stage, with sort of a lot of AI being available to us, what are you seeing as some of the things that people are trying to do during onboarding to prevent a lot of these mules? Because I think, like we said, prevention is better than cure. If we can prevent them from coming in, I think we're in a much better place.
So, Paritosh, let me break this into two parts. So one is there is some very simple conventional stuff that
Right.
onboarding channels need to do, whether it is a physical channel or digital channel. I mean, as simple as saying, I mean, for a physical channel, let's say, have you actually visited the location of the customer? Have you checked whether the customer is in the same business that the customer claims to be in? So those are very, very obvious checks. I don't think they need any significant dose of artificial intelligence to be built in. And that is, I mean, I won't undermine the importance of that, like especially in the context of a bank which has, a geographical spread which is massive. Now, coming to specifically your question around can we deploy AI? The answer is yes. Where and how you deploy AI is the question. The point here is that there are certain, I mean, there are certain profiles of the customers you're getting onboarded. Uh, if we have a lot of data around those customers, now that could be data coming in from the information that's being filled in by the customer. It could also be external data that we can source from various other systems which are available. It could be some of our own, banks transaction data. Even if we have not, if even if the customer is not a customer of ours, that does not mean that I don't have a footprint of that individual in the system, because that individual may have been a counterparty to any of our customers. So to that extent, there is a footprint available around that individual or that entity. So I think we kind of put all of this data together and try and identify any kind of an anomalous pattern which would alert us to the possibility of it being a mule. Now, I would still call it a possibility, and that's not to say that we would necessarily reject the onboarding. What it would probably mean is that there'll be some kind of a step up in terms of diligence.
Right.
That's where AI has a fair amount of application, and that's where the benefits would probably flow from. At least that's what we have seen in our practice.
Yeah, no, I think very fair. I think, like I said, I mean, the traditional methods don't go away, but I think it's now that we have this enormous computing power and information sort of that's out there of everybody. I think, is there something we can do around that to add to our models and our risk sort of mitigation strategies? Prakarsh, I'll jump to you as well for the same question, because I know we've been looking at it, and I
Yeah,
spent a fair bit of time trying to figure this out, because playing in the onboarding space, that's one of the challenges we try to solve for. So we'd love to hear what you've been looking at.
no, thanks, Paritosh, and thanks again everyone for kind of joining this webinar. Happy to be here and present my thoughts. So I think, Paritosh, like in terms of onboarding, right? I think one of the things that we generally see as far as account onboarding goes, at least the process status quo is oriented towards underwriting for identity and not necessarily the intent, right? And in a lot of these mule account, intent is essentially paramount. So what sort of, and Gaurav alluded to it in terms of what sort of alternate signals, etc., data points that can be gathered while you are onboarding the person to be also in a position where you can judge intent, right? And things, such as the identity is saying something versus, the digital footprint, or, like just the overall demography is showing a different behavior. So a play where, onboarding journey also underwrites for intent while you onboard is something that I feel is critical. Another thing that I feel is, while we understand there are different categories of risk, and, like the standard categorization of low, medium, high risk per se. But invariably, like in spite of the risk, etc., the flows for onboarding are largely consistent, right? Because again, depends on the product type, depends on the bank policies, etc. But flows don't necessarily on the ground, like change as because risk identification not necessarily is being proactive, and flows are also, like significant process sort of investments. So however, flows becoming dynamic, becoming non-uniform as the risk is changing while you onboard. So I think these are areas where I feel onboarding needs to change, and few of the technologies, AI, as well as, just the intelligence collect around intelligence after you have collected, all these alternate data points plus the data that the customer is providing, I think becomes very, very critical. And then how you design your flows.
Right.
That's broadly what I think. Yeah.
No, I think that's a very fair point. I think the only one caveat I'll leave you with, and maybe we can cover this towards the end, is with the DPDPA Act coming into play now. I think a lot of this conversation also needs to factor in, sort of a user's privacy and what data you can use for doing some of these these models that we create, right? So I think that's going to be a bit of a challenge to just figure out. I think that I don't think it's not a problem that we can't solve. It's just a matter of just being careful about, how we take consent and how we manage the data, because that's going to become a big part of the whole journey for a user. Now, sort of post onboarding. Now let's assume we've done a decent job at onboarding and we bring someone in. Now then there is the account gets created. Now, my question again to you, Gaurav, is let's assume there were no signals found in onboarding. At what stage within this process of this post account creation, once they've been onboarded, do banks typically identify these activities? And does it seem like, is it too late by then? Sort of what's the typical trend? And then and maybe also shed some light on what are ways to mitigate and look for some of these patterns.
Sure. So, Paritosh, look, from an objective standpoint, obviously, we would want to identify a potential mule as early as possible, right? If for whatever reason we haven't been able to do so at the point of onboarding, then my ideal case would be, okay, can I do it at T+1? So that's the way we see it. Now, the way to approach this problem is that there are varying data points that are available at every point in time. So there is a certain set of data points that are available, let's say at a T+1. There is possibly that plus some more data available, say at a T+7. Maybe you have some more data available at a T+30, and so on and so forth. So I think the way one approaches it is to say that at every stage you run some kind of a detection model, which essentially looks for anomalies, and the model is in a way calibrated basis the data signals that are available at each stage. So a T+1 model versus a T+7 versus a T+30 may not be the same.
Okay.
Obviously, T+30 would have more data points, but then the fact also is that by the time we get to T+30, it may be too late. So at every point, you are in a way running these concurrent models and trying to identify if there is a sign that this may have or is maybe on the verge of turning into a mule. And of course, as banks, will typically have a fairly strong, monitoring system in place. But the monitoring system needs to be able to react in real time, to be able to, identify and take action on these accounts. Important aspect here, of course, is that you're always fighting this battle between maximizing your catch and minimizing your false positives. That's an ongoing debate. And as we've seen, I mean, on the liability side, the acceptance of false positives is significantly lower, by a multiplier compared to what it would be on the asset side. And hence the need for even sharper models, and hence also the need for, step ups, which are, not necessarily hurting the genuine customers. So, but you will need to have a multi-pronged approach. Some of these approaches would also vary by type of account, by constitution, and some of those,
Right.
variables.
So maybe just to just a little double down on that. Couple of things. One is, what may be some examples of these signs, right? So that is first questions that we may look at. Let's say T minus, T+1, T+7, and T+30. But also, in some sense, from a little bit of understanding that I have is, some of these mule accounts that are set up and the usage happens much later in the game, right? So they want to establish some sort of genuine pattern of usage, and then they start to do the fraud, maybe let's say 2 months down the road after they've been in. So that's another maybe question and a little bit of detail. Maybe you can just give us your thoughts on that.
Sure. Okay. I think Babita is here.
Yeah.
Hi, Babita. So I'll maybe answer this one, and then we'll go to her.
Yes.
So let's see. I'll give you examples of data signals that I'm
Sorry
talking
for
about.
joining in late.
Yeah. Hi, Babita. Welcome.
I'll give you examples of some data signals. So, for example, let's say there is an initial deposit that's taken with the account opening. If that initial deposit is getting withdrawn within the first few days, that's typically a risk signal. Second is that, let's say the account is set up with a KYC as per which the customer's address is, say, Mumbai, but the internet banking login or the mobile banking registration happens from, say, Jharkhand. Now, that's a non-bond trigger, right?
Right.
Third is, of course, if you find that there's a lot of, let's say you opened a salaried account, and suddenly you are seeing, hundreds of small credits coming into the account. Now, that's not in line with the declared profile of the customer. So I think, these are some of the examples. I mean, it can be a long list, but these are just some examples of data signals that one can pick up at various stages, and then you use those in the models at every stage to identify incremental gains.
Got it. Yeah. That makes a lot of sense. I think those are some actually really good examples of triggers that you'd start looking for, because I think the profile mismatch is probably one of the biggest things you see from the behavior that you see in the account versus what has been declared by the customer. So I think that's a big driver. Now, I would like to also quickly just go back to Babita. Welcome, Babita. Thank you for joining us.
Thank you so much.
For some of I think you had some challenges, but apologies for that. I'll just quickly introduce you. Babita is Senior Vice President, Information Technology at HDFC Bank. She also has 25 plus years of experience in financial services. She's led a lot of mission critical programs across the digital transformation, risk, and AI led. And then she's very well regarded across the network in the fintech ecosystem, especially. She has a lot of focus on large scale transformation. So thank you for joining us, Babita. We have sort of we have moved on to sort of part two, and what we were talking about is post account creation. How do you identify any sort of mule activity, right? And the question is it too late? And I think Gaurav had some wonderful points about there are some signals, T+1, T+7, T+30, and models that run continuously trying to identify it. So I'd love to get your perspective as well.
Yeah. So typically for post account opening kind of checks, we have a complete setup where on everyday basis, the account opening base is deduced and full base is also deduced against, say, for example, Dow Jones ka terrorist list or OPEC or any other external entity ka list, which we deduct against mule base, any negative pin code base, any MHA given data. All these dedups are being done on a daily basis. So it's a mammoth dedupe task being run. Once this dedupe identifies yes, this customer is a negative customer, then there is a utility which identifies which kind of dedupe is being identified by this processing. Then basis the severity, criticality, there is a workflow which operations team run that workflow and put these cases into multiple buckets. Once that is done, then they give it to branch for EDD and other due diligence to be done with respect to, say, checking with customer, checking other profile related information, specifically mailing address related information. In case address is incomplete, those aspects are being checked, and accordingly they decide to block and unblock the account. So there is whole lot of process being run in the bank to get the post account opening dedupe done.
Right. Yeah. I mean, that makes sense. And I think there's the what I hear is also that's a large mammoth exercise, right? I mean, you're talking about millions of customers checked every day for certain signals and triggers. So again, going back to our point, Gaurav, which you mentioned earlier, it's better to prevent than to. So the cost itself, again, I think it becomes a big cost factor that you have to sort of think of when you say, hey, if you onboarded someone, then we have to worry about continuously monitoring for this. Prakarsh, I'll come to you quickly for your thoughts, a couple of minutes on this as well.
Yeah, sure, Paritosh. I think, I think once you onboard, right, and just building upon the point that Gaurav was mentioning around, underwriting and trust. So once you've onboarded, essentially, this trust is not essentially a static score of this customer, but it's almost like, it's a continuous sort of trust scoring that you actually do against that customer, right? And depending on, again, how much they have spent in that life cycle with of that account based relationship, and how much data you have, how this trust is essentially sloping either positively or negatively, right? And then if those things are in place, then what are the progressive controls we can build, right? So things like few of the things that I'm just giving an example. If let's say after 4 or 5 months of account opening, I realized okay, if my average monthly balance is say 1 lakh rupees, right, and suddenly all of a sudden I'm doing a transaction of say 6 lakhs, 7 lakhs, right? So are there specific checks built in that saying okay, the transaction per se is not in line with the profile or the nature of nature that this customer has been onboarding? Plus, let's say again you add in those and banking models essentially would be largely on the transaction data, but you couple it with external data point that is available around say digital footprint, again demography, etc., and see whether both of them are giving some sort of a continuous trust profiling of that customer. And then essentially link those analysis. I'll also like to think and welcome the thoughts of the other panelists as well on Mule as a problem essentially is also not an individual problem. It is often a network problem. So this identifying not just individual but a network as far as related individuals, and related transactions go, that might be another interesting sort of dimension to look at while identifying okay, maybe this transaction in isolation looks okay, but when combined in a network, it is often suspicious or fishy.
Yeah, no, fair. And I think a lot of the stories are around now these organized networks that are trying to, use these mule accounts to transfer funds and do all sorts of illegal activities. So you're right. You have to look at it also, sort of zoom out a little bit and not be stuck on just the individual transaction. Now, you touched upon obviously transactions. So I will move to transactions next and talk about and ask, you about just transaction, right? I mean, there's obviously a host of, and I think a lot of work has been done around this, and that's probably one of the places where we see a lot of activity, probably, or at least in the news, right, is around transactions. So Gaurav, maybe a little bit of your commentary on this in terms of what you have seen, does it work? How does it work? And maybe are there things you're doing above and beyond that? Because there are some standards that everyone is using, but there's just some beyond that we can look at.
Yeah, so see, Paritosh, if we, if you're wanting to catch a mule at a transaction stage, I'm not saying we should not do it or we don't do it, but it's a least preferred model.
Yeah.
Because it's kind of a post-mortem. Damage has happened, and now we are in a way doing a damage control exercise. So, but unfortunately, it's a mammoth task in itself. Uh, and whether we like it or not, there is a fair amount of effort we end up doing because we do have mules in the system. Now, however, the way we look at it is that are there transactions that can indicate towards a likely mule behavior before the actual mule transaction having been transacted? I think that's the area where we try and spend a lot of effort. You talked about network. Yes, there are signals that one can pick from a network analysis, both at a transaction level and at an entity level, which could give you certain signals around it. And if you are saying that eventually a transaction has taken place which is fraudulent in nature, see, from there on, to my mind at least, that's not a prevention anymore. Then at that stage, we're just kind of reacting to the situation and we're just kind of doing damage control. So at least from a focus standpoint, the objective always is to pick up what we call as NMON events, as a non-monetary events, which hint towards likelihood of an account turning mule, or we pick up some network signals that tell us that this is where the problem is headed, or we pick up transactions that are not necessarily fraudulent at this point in time, but are indicating that this is going in that direction. So if we had a choice, we would like to focus a lot more on these three aspects as opposed to a post-fraudulent transaction, which is essentially a post-mortem.
Good one. I think that's a very, very valid point, and I think that's I like the way you phrased it. I think it's by the time if you're looking at it post-mortem, you're just trying to do damage control and hope that you haven't lost a lot of money, and then you figure out how do you work with the authorities and all of that. I think so. There's a lot more focus ends up moving on that rather than actually solving the problem. But I think I like what you said, which is to say look at the network and look at the transactions to see if they're moving towards a mule type of behavior. I think that's a very interesting point that you brought up. And that, again, I'm assuming there's a lot of AI and a lot of modeling to try to look at that and figure out if it's tending, it's almost like it's tending to mule and then sort of block and put maybe double checks in place. Babita, I'd love to hear your perspective on this as well.
Yeah. So I agree with Gaurav that immediately the trigger is customer transaction. So by the time we get that trigger, we analyze, we send alert, it's too late. While it is in, say, milliseconds, that alert is generated immediately after that transaction. That kind of real-time monitoring we do have. But yeah, it is a post facto. That is point number one. Point number two, there are certainly some AI ML-based models which banks have created, which helps us do analysis like which is going to be a mule sort of transaction basis the multiple patterns, how much cash deposit, withdrawals, deposits in third party account, or any such say different locations are being used, not related accounts are being used for fund transfer. So if multiple transactions are happening in these accounts, so we do have such models in the bank which identify potential mule customers, which helps us give some insight to create those rules. So like currently we have implemented that business rule engine for liabilities account. So then rule building, such analysis helps like what kind of checks we should have while doing the account opening activity. If you see from current account perspective, we do have a lot of EDD, like how much is the turnover, how much, what AML sort of details he is providing, and actually what activities he is doing in this account. The address given on CPV, we realized that there is no such address exists. There was a building which is demolished. So these kinds of challenges are always available, and that is where we are targeting to address this before opening the account as part of, say, eligibility engine for liabilities, even for loan. These checks are being done in the bank.
Yeah,
but yeah, we do have to have a kind of active transaction monitoring on the lines of, say, RBI, which is mulehunter.ai. I think it is going into the same direction where upfront we will be able to see what kind of transaction is going to happen. So fortunately, HDFC Bank has also participated in that DPIP, and we see a lot of hope from that infrastructure and platform. That is what is my view.
Yeah, fair. And I think you bring up a very interesting point hidden in all your in all the information you gave us, is that you are using learnings from this and sort of it feeds your onboarding model. So I think that's an interesting point, right? So all the learning that the question is, do you forget it and you just use it also continuously in the same place, or do you say, look, can I learn and bring this up front so that at onboarding I can start to prevent and use these patterns to identify? Prakarsh, quick couple of minutes from your side on what your thoughts are.
Paritosh. So, and again, great to hear a few of the viewpoints. The way I look at, like transaction modeling is specifically is, even in a simple transaction, there are different features, right? So, in addition to the cash flow, which primarily deals with, what is the total amount, etc., how much days often the customer kind of transacts it. There are things like, okay, engagement, right? Like what is the age, what are the transaction channels, what are the modes essentially that the customer has used, quality of the transaction, right? Things like whether the transaction has declined, failed, how many, activity, uh, how active is the customer, how can I mark some sort of activity level of against those transactions. What is the velocity of those transactions, right? Are there certain patterns between, opening and closing balance versus balances between the day? Are there certain seasonality, etc., those kind of things? So I see transaction modeling itself as a, and obviously most of the banks essentially have a lot of internal database sort of modeling against these features, which kind of can then be used to identify, okay, this transaction looks like a normal transaction, or it is essentially look essentially a little bit iffy and riskier transaction. And again, I think when the transaction is this, like, or each of these singular transaction, when you put it with variables of speed, mode, engagement levels, consistency, etc., and map it against a network, I think then like a full map of riskier transactions might show up, which essentially can allude to like a riskier pattern per se. But yeah, like a very data intensive, like data science as well as AI should be able to kind of bring a lot of value specifically on this aspect.
Yeah, so I think that also very nicely moves me to my next point, and sort of the final point on this is, the theme of we've talked a lot, and I think everywhere I've heard is technology obviously has a big play in this, right? Beyond sort of, let's say, process and people. So my question is, to each of you, one by one, I'll go across the board. Is what are some of these technologies that are genuinely moving the needle when it comes to catching mule fraud? Maybe this time I'll start with Babita. Maybe you can talk about it, and then Gaurav, you, and then Prakarsh.
Yeah. So, Paritosh, we are talking about the quantum to the extent of, say, UPI transaction. If you see 20 billion transactions are happening on UPI, out of which, say, HDFC Bank is contributing, say, 7 to 8%. And mostly digital frauds are around digital payments. Like the mule and fraudsters are much ahead of us. They are very tech savvy. They are very tech savvy. And on the contrary, we have not yet reached to the stage where too much of AI is used to detect such kind of frauds upfront. So I think there is a need to have a very good budget for technology investment for entities like bank, etc. That is need of the hour. And otherwise, also there has to be a stringent KYC process and EDD process. There also a lot of technology implementation is needed. While we have been following the traditional method of, say, OTP based eKYC, etc. So kind of face authentication, having awareness amongst all ecosystem entities to use such kind of technology when we are embarking on digital transformation journey. these are the first steps where we have to have such kind of due diligence. Otherwise, we will end up having this kind of problem. And similarly, we have to have like HDFC Bank has decided to have a zero block account approach. So what does it mean? I will not open any account which subsequently I'm supposed to block. I have to block it upfront. So it's a shift left kind of approach. So rather than processing in the back end, I want to process on the left side of the journey, having all technological solutions available at the journey platform itself, rather than doing blocking subsequently. So those kind of technology implementations are very much required. Plus, at the same time, if some AI ML models are there, so continuous upgrade, review of those models and getting up to the mark with the kind of frauds are happening will be need of the hour. Because see, typically our solutions are around say limited to the onboarding journey, then profile updation journey, transaction monitoring journey. But there are a lot of say phishing, wishing, smear phishing kind of digital arrest kind of frauds happening. So as a society, I think our responsibility lies to address all these kind of problems, maybe through some awareness, etc. Like if you see HDFC Bank has launched that vigilante program. So that is definitely helping customer and bringing that awareness. So I think along with technology, we'll have to have some responsible approach towards addressing this mule problem.
Fair. I think definitely there is a beyond technology solution, and sort of, if we all take it as a thing to solve for, I think then we look at it beyond just technology. But Gaurav, love your thoughts on maybe other alternate things that can be done, and what you think maybe it's here, maybe it's coming, but that will really help move the needle when it comes to use of technology.
No, so sure. I think I largely agree with what Babita said. I'll put it this way that to my mind, there are three areas in which a lot of technology deployment needs to take place. The first is at the onboarding stage itself. So if we are able to left shift the detection of the problem, so there is, and when I, to kind of imagine what the technology would look like, we need to have, as we said, an underwriting pipe for every liability onboarding. And remember that liability onboarding across banks today is a real-time process. Whether it is physical or digital or phygital, it is always a real-time process. So we need to have ability to detect, flag and detect suspicious behavior in real time at the point of onboarding. So that is one large stack of technology that we need to develop, where a detection, and second, an ability to take action on that detection, pass every application through some kind of an underwriting engine. So that's one large block of technological capability acquisition that needs to happen. The second is that, see, historically, the fraud risk management or the EFRM system of the bank have largely been designed for detecting third-party fraud. That's where they're stronger. The EFRM themselves are evolving to be able to catch first-party fraud better than what they catch currently. And that's the other large area of investment from a technology standpoint, purely because of the sheer amount of data that needs to be fed into these systems for them to work on first party as opposed to third party. So the entire data ingestion exercise, the amount of data that needs to go in, that's a technology heavy lifting in itself. So that's the second area of technology investment from a bank standpoint. And the third area of technology investment is, it's like saying that, as we said, prevention is better than cure, but then we still need to cure the patient that we have. So how do we have a very speedy and a efficient investigation engine built in without necessarily having to do physical EDDs in all the cases? I mean, at the scale at which this problem is exploding, is it really practical for us to do thousands of physical EDDs? What's the time that will be taken for us to do those EDDs? So I think there's again a technology solution needed, technology plus data solution needed to address this entire post facto or the investigation part of it. And largely, the investments in the technology are in these three areas, at least the way we see it. And I mean, it will have a mix of conventional technology. It will have, AI. It will have data analytics. A lot of engineering will have to take place here. We will need to stitch these systems with our core banking systems. That's also part of the scope. So that's largely the three areas which I would like to call out.
No, fair. And I think, yeah, like you said, it's also a huge data problem, right? I mean, and data processing in itself is a challenge that I think not just banks, every large organization struggles with. So they're there, but again, hopefully with enough NVIDIA chips, we'll be able to process these
Yeah, they
challenges that
come
we
at
see.
a price, huh?
Yeah, they come at a high price, exactly. Prakash, just one quick last bit from you on this bit as well, and then I want to take a couple of questions that folks that have joined the webinar have.
Sure, Pratosh. And I think, both Gaurav as well as Babita has covered, a lot of aspects related to this problem. What I'll try to kind of narrow down on is, outside of the banking data, if we look at, like few of the levers that can be doubled down on, as far as, using from a technology lens, few of the things. So one is, like biometrics that I think of, right? And things like deduplication is largely, limited to things like say a PAN number or things like a mobile number, cust ID, and things like those. The just the like expanding that dupe engine to things like facial biometrics, things like thumb or face per se, which remain consistent, right? So whether the customer that I have onboarded is actually the customer who's also transacting when something fishy is going on is something that I think just expanding the scope of dedupe is sort of like one of the things that come to me. The other one is like we touched a little bit on this throughout the webinar is on this like having this network or ecosystem intelligence in terms of even with respect to accounts or customers, what is the network or graph of that customer and graph of that transaction, and basis that kind of try to identify what is suspicious versus what is not. I also feel a lot of device sort of fingerprint in terms of okay, whether this device is actually compromised, right? And like outside of IP, can we have things more with has intelligence around devices or kind of figuring out patterns through which like a significant portion of this like fraudulent or mule activity kind of comes through. And I'll like to kind of close with something that I started as well. Can we have underwriting models which use alternate data that underwrite for intent, right? And few of the things like digital footprint, things like velocity, things like who initiated the journey, whether it's the same person or is it an assisted journey, things whether it is through a new phone, through a different email address, things like those. So I think if the models kind of become strengthened and strong enough to kind of underwrite for intent in addition to identity, I think it should at least like slope towards solving or identifying this as a problem.
Sure. Let's just take a couple of questions here. I think there is one interesting question we have, and maybe controversial, but interesting nonetheless. And I think I'll take that question first. I think it says, the question is, mule networks don't operate in silos, but banks do. What does meaningful cross-institution collaboration realistically look like? I would open it up to Gaurav and Babita for this.
Yeah, so I think cross-bank collaboration, mulehunter.ai came to my mind because that is where I think all banks are sharing their mule account data to a regulator. And that is where I think a collaboration, it's a first step towards such a big collaboration. If even at a transaction level, we are able to use this data and dedupe, we are going to do wonders. That is my view on this.
Gaurav?
Kind of.
No, so it's a fair comment. It's also a reflection on the industry's inability to kind of come together in a collaborative way, the way one would like to. But I think the good news, as Babita said, is that things have changed. There are consortium models. Remember that even for FRMs, we use consortium models where there is data flowing in. There is also, Hunter, not Hunter.ai, but Hunter as in the Experian product, where again there is, that's again a consortium model. So industry has come together on this. I don't think that, it's as fragmented as it used to be. But yeah, I do agree that there is a lot more to do. The challenges, of course, are around, data sharing. I don't think it's an issue of intent or of somebody saying, "Oh, fine, this is my IP, I'm going to share it with you." That's not what it is. I think it's more to do with the nature of the beast. We as regulated entities need to stay and operate within the realm of the regulation, though the syndicates do not carry any such obligations. So to that extent, it's an uneven playing field. But within that, I think things are evolving, and we should, you know, with some intervention from the regulator and the government, we should get better from where we are.
Fair point. I think yes, there is movement. So I think that's the underlying point, right? We are all moving towards it, and I think we recognize it, and hopefully we'll see even better and better collaboration around this. I'll take one more, and then I think we'll have to, in the interest of time. I think this one is an interesting one. I'm debating whether to take this one or more philosophical question that someone had. I think the question was, what is the real cost of identifying a mule late beyond financial loss? I think I'm sure all of us have lots of viewpoints on this. So maybe Gaurav, you can go, and then Babita.
So at a personal level, sometimes it costs you the night's sleep. You have. See, the whole problem is that the way to look at it is that banks are essentially a victim themselves in this entire episode. But when this happens, because we've been used, we end up facing a lot of, pressure from either the regulator or the law enforcement agencies. And I think, to my mind, other than everything else, that's the real cost that we as institutions end up paying. And I think it's kind of impossible to quantify it, but it's a massive, massive cost, and it's just been going up.
Fair. I think,
And of course, this, for example, this is not what you want to read in the papers that, oh, by the way,
yeah.
So that's
Yeah,
the reputation
absolutely. Yeah,
the
the bank ABC has been called
Right.
out because there's so much mule fraud happening. Absolutely, that's a huge. I think it's a reputation. It's many layers to this. I think, and unfortunately, sometimes I think people look at it more just as the financial aspect of it and stop there. I think the multiple layers of effects are not thought through. Babita, your take. I'm sure it's very similar.
Yeah, so it's a costly affair. I agree with Gaurav. But I think bank has taken a conscious call to not shy away with this investment, or say to the extent like even HDFC Bank has its own AI platform where we are doing in-house development, and we are getting ready ourselves to reach to that stage without having any dependency of any third party, because ultimately like my ED etc, they don't want to be called out, or maybe I mean given an ultimatum sort of say behind the bars etc. It's a really very 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 serious and critical issue for all of us in fact. So definitely it comes with a cost, plus I think it will have impact on business volumes also, because more the checks, more the risk identification, more impact on TAT and also on business. But it is in long run going to pay us.
Yeah, I think I'll just leave with this my single viewpoint, which is maybe a little different than yours, because I'll take the other side, which is the person whose account gets used, and sort of there's a lot of social impact there as well, right? Because now, and I think I flip it the other way, because I think the trust in the system starts to break, because now you view everyone as potentially a mule account, which means now when there is low trust, and again, and I think right, Babita, right, you like to point out, business starts to drop. So I think it's a huge web of challenges and issues that crop up with this just small conversation of saying, oh, mule account, you sort of solve it. But I think there's a whole web of challenges that come with it. I think in the interest of time, I think we'll have to stop here. But thank you so much, Gaurav and Babita and Prakarsh, for your insights. I think for me, this was wonderful to hear that there's so much investment happening and sort of a lot of deep thought happening, more than just investment. I think there's a lot of deep thought going into how do we solve a problem like this, and it's a big problem for India, and I think we need to solve it. So thank you very much for your time, and I really appreciate you being a part of this. Thanks everyone for joining in.
Thank you
so much.
thanks
Thank you.
Paritosh. Thank you.
Thanks.
Take
Bye-bye.
care. Thank you.
Thanks.